So, hello and welcome to the Assay. Today, I am pleased to be joined by Scott Clements, Head of Corporate Advisory at Tribeca Capital. So, Scott, thanks for joining us here today.
Thanks, Amy. Thanks for reaching out.
Lily, it's always great to be able to catch up. And maybe you could just start us off by telling us a bit about your background in the resources investment space.
Yeah, it kind of happened by accident, I guess. I'd worked in Asia and I moved away for a bit, and I came back in 2009, which coincided with the sort of last bull market cycle we had, and particularly with Asian investors in natural resources at the time, and particularly the Chinese. And so I was working for one of the Canadian investment banks here and setting up an equity business, and it was just really a blatantly obvious strategy to work on connecting Asian capital into North American natural resource companies. And so we built part of the equity business around that. And in the course of that, I um, was working on a number of cross-border transactions and building a team and building relationships, and it really just started there. So I'm just a generic finance guy. I don't have a resources background, but I guess I've been involved in the sector long enough to be slightly dangerous, but not very.
Absolutely. I mean, I think you definitely learn as you go, and spending quite a long time in the industry, you certainly kind of get to understand what the key trends and themes are. So now you're with Tribeca, and I know Tribeca is quite kind of heavily focused in the critical minerals space. So can you talk a little bit about how this focus has developed over the years and where you see kind of the core focus or strategy for the firm now?
Yeah, well, I joined Tribeca after the resources investment business had already started. So I was joining an existing franchise that was actively investing in resources. And just to be clear, I'm not on the investment side at Tribeca, and that's a separately run part of the business. I run the advisory piece, but I do a lot of work with resource companies, as do my partners, and we're a small firm, so we're very much about leveraging our overall knowledge and experience in various sectors where we're active. And so I think it's safe to say that we started as a firm as a fairly traditional natural resource investor, and the focus was really on top down picking commodities, and then bottom up trying to figure out the best way to express a view on a company basis in a given commodity. And I think what's changed over the years is we've had this whole energy transition and decarbonization thematic merge into the resources space, and that's created opportunities and different thematics. And so one of them, we run a nuclear energy fund that's managed by Guy Keller out of Sydney, and that started as very much a commodity view, where we just thought that uranium had been severely underinvested for years, and in commodities there's this fairly obvious relationship between investment and pricing, and we just thought that at some point uranium prices would have to go up, and the companies who were in the space would do well if they were well managed, and that's come to pass. And I think the other thing that's changed over the years is that through this whole decarbonization focus that we've had globally, the intersection of the upstream and the downstream has been very important. And so we've become much more active in the downstream space and looking at innovative clean technologies, because those directly impact the upstream. And I think if you only focus on the upstream or the downstream, you don't really have the full picture to understand which technologies may require substitution of key upstream commodities for inputs, and conversely, you can have a great downstream technology, but if you can't feed it in through a supply chain, then that's not going to work either. So I think we've developed, or we've tried to develop, a much more integrated understanding of the space, because these things are changing, and then obviously geopolitics are very influential in the sector as well, which is probably a newer phenomenon.
Yeah, absolutely. And I mean, speaking of geopolitics, like from your position in Singapore, how are you reading the current situation and, the trade wars? How, do you have an opinion on impacts this may have on the industry, or how things may play out? I don't know if that's easy to assess, but
Yeah, I think we're all getting headline fatigue, because every morning you wake up and something new and exciting has been said. And but I think Singapore, you're right in the sense that Singapore has always been close to both the U.S. and China. There's a very close military relationship here with the U.S. and Singapore and China have been very close geopolitically over the years. And so you definitely get a more balanced perspective here than you would if you were living in the US or China or Europe or somewhere else, for example. And I think the implications for the sector have really been formulating themselves over the past number of years, I would say, in the sense, and it started in the Biden administration with the IRA and incentivizing the onshoring of production, and I think the Western world was starting to get an understanding of their vulnerability around these key supply chains that had both industrial and defense applications. And so this new Trump administration is only accelerating the sensitivity around these things. So I think what that means for the upstream is that the location of assets has become more and more important over time, and in a perfectly globalized playing field for the sector, I think people were somewhat agnostic to where assets were located, and obviously there's more political risk in some places than others. But we've now moved into a world where you have certain countries and regions where probably substandard assets in some ways will end up getting developed to production just by virtue of their geographical location, and then other assets that are in more difficult places probably won't. So I think that friend shoring of upstream supply chains is it's not just a Trump administration thing. It's been happening for a while, but it's definitely become more and more acutely focused on by people looking to finance and develop these projects.
yeah, absolutely. And I mean, I guess from your role in the corporate advisory side of the business, what do you hear from your clients, or are there kind of key concerns that are coming up from them related to all of these kind of geopolitical issues?
Well, everyone's trying to figure it out, and
Yeah.
and it's a hard enough sector to invest in to begin with, just because of the violent, sometimes cyclicality of the sector. And as an investor, you can get it spectacularly wrong if your timing is bad, and vice versa. So it's never easy. And I think the geopolitics and we're in a it's affecting every industry, so it's not unique to the resources sector. But I think no one really knows how the year is going to play out in terms of macro fundamentals. Whether we will have a recession, how badly things like shipping are going to be disrupted, that will affect the industry, how capital markets will react. We have certainly had reduced financing activities in equity markets over the last little while, which is due to uncertainty, which the markets hate. So safe to say, I think everyone's a little bit confused. And in resources, I guess the bright spots would be the gold market has benefited from the uncertainty, and we've seen corporate activity in the gold, between gold companies and people with prospective gold assets are able to find finance. But I think, battery materials has been pretty challenged, and everyone's very confused about that market and how supply chains will evolve. And copper is confusing because it's, a little bit schizophrenic between whether it's a, green energy transition metal or is it a proxy on Chinese industrial growth. And everyone's, I think, really scratching their heads. So sorry, I can't give you any better insight than everyone's a little bit confused right now.
Yeah, absolutely. That's perfectly fine. And I guess just to, kind of close it off, as we said, it is quite hard to predict or hard to kind of assess what's going to happen. But any kind of thoughts on the year ahead, key themes, key challenges, or maybe even opportunities that you think could potentially arise in the metals and mining space that we could be on the lookout for?
Yeah, well, it's obviously, as I just said, it's a difficult time to make predictions, and the markets are not easy. But I think what we've all learned over the years in the sector is that eventually the fundamentals win out, and if you have a good asset that is managed by a good team, then eventually it's going to work, and you're able to finance it. I guess that's the other piece. And so, you look at commodities like copper. I think no matter what your short-term view is, it's very easy to defend the thesis that there is a supply shortage out there over the medium term, and good copper projects will be in demand. Similarly, for a commodity like uranium, uranium prices have been really challenged over the last 6 to 9 months, but over that time, the thesis for nuclear energy has only gotten stronger, and so many new countries are looking at it, including here in Singapore where I sit, and all over the world, and so fundamentally, uranium can be a bit of a slow-moving commodity in a price sense, but I think the fundamental thesis for it is very much intact, and I think if you have the ability to take a medium to long-term view, then that should pay off for you. So I think that's the thing that gives investors comfort who have a longer term horizon is that the fundamentals are quite strong for a number of commodities, and if you are diligent about picking the right ways to express your view with the right companies, then you can make a lot of money over the next few years by getting set now when the market is uncertain, and there's this, a lack of liquidity in some things, and that leads to opportunities for investors.
Absolutely. Well, I mean, it's certainly an interesting time to be in this market, but as you said, kind of the geopolitics are impacting every market. It's not just metals and mining, but it's could be a potentially very interesting time as well. So those were all the questions that I had for you today, Scott. So I want to thank you for joining us here today on the Assay.
Yeah, thanks very much, Amy.